Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is What Can We Learn from Past Crises Like COVID-19 to Prepare for Future Crises? So my name is Shen Chu. I'm the moderator for this webinar. And before mentioned here, if you decide to make any investment decision, you're solely responsible for all your investment risks. Now, allow me to briefly introduce our speaker today. She is a seasoned investor, trader, and educator with over 30 years of experience across global financial markets. She has extensive experience in stocks, options, CFDs, forex, and futures. Her core approach is top-down, from macro to industry to stocks, and she uses a combination of fundamental and technical analysis. She began part-time trading in the Malaysian market in 1992 and in the US market in 1997 and became a full-time trader in 2008. She worked in the semiconductor industry for 17 years, with the last role as an automation APAC manager at Intel. She's passionate in trading psychology, as she believes that money management and psychology contribute 90% of the success in achieving consistency and in investment and trading. And she founded Beyond Insights in October 2008, focusing on investment and trading education. So she's none other than Miss Kathlyn Toh. Kathlyn, good evening. How are you today?
Okay, hi, Shane. And welcome everyone. Good to see every one of you.
All right, it's a pleasure to host you today. So I'll stop sharing my screen and hand over the control to you.
All right, thank you, Shane. Yes. Okay. Okay. So let me share my screen. All right, welcome everyone to this webinar today, which is how do we learn from the past crisis, right, to prepare for the future. And right now, right, are we having a crisis right now? Anyone know? Anyone know what crisis are we having right now? Yeah, can you hear me? Is it no sound?
Can hear now.
Oh, yes,
Can hear,
I can hear you.
Okay. Yeah, so now we have this US-Iran war. And you know, the market is likely going to be affected by a lot of this news these days. The more important part is, you know, why do we have this topic? Yeah, even though some of you may be thinking, oh, even COVID-19 too long ago, isn't this outdated? To me, it is not so, because I've traded for 33 years really until now. I've seen many, many crises, and there's a repeated pattern. And the most important part is how do we manage our risk during that time. So my goal here is to be able to share with you from my experience in going through various crises, right? What are some of the psychological barrier that actually holding people back, you know, from they could be making a lot of money, but could be giving it back, right? And if you don't have a systematic process, the order works fine, okay? Could you check? There's no sound. Are you able to hear me, Shane?
Oh, yes, I can hear.
Yes, we can
but
hear you
the
well.
audio works fine. Oh, okay. So it's because some of them says no sound. Yeah. Okay. Because from our side it's okay. Yeah. So the learning outcome that I have here for you is to learn from these past major crises to prepare for the future. I'm going to highlight three major ones that affect Asia. The second one is be aware of the major macro risks, right? So we're also going to look forward, right? Not just backward. So after you learn from this past crisis, what are the major crises that we need to prepare for, right? Looking ahead. And last but not least is how are we going to be consistent, right? Despite all the events in the market. All right. So if you have any other expectations, right, do type on the chat, right? We'll see how I can answer that towards the end of it. But before that, you know, as I present, I hope we can keep to the scope of this topic first, right? Until the end, we can then open up to some of your concern, especially, you know, when we have this volatile market and news right now. All right. So let's get started. This is a very passionate topic, right? Over the 33 years of experience, I've gone through many, many market cycles, and some smooth ones, some volatile, some major bull run as well. So the key is many people do not have a a way to manage it, and it become a lot of anxiety. So I'm picking 3 major crises that relates to Asia, right? To this, there are many others crises in the world that's related to global market. Yeah, so I won't have time to cover all of them. So I picked the major one that involves Asia, which is 1997, 2008, and 2020, right? So it's going to be in a timeline right now. So the first one, which is my first major experience since I start trading, I started working. My first job after graduate was in 1992. And I started with 2,000 ringgit. Okay, I took 1 whole year. I don't come from a rich family. I took 1 whole year to save up to invest in my first Bursa stock. And at the time, 1 lot is 1,000 units, right? So it's more expensive. I can only afford to buy 1 lot of share at that time. And I was very naive because I don't learn it properly. So I follow my colleague who is, I call a Bursa Kaki, right? So during the break time, he will, share with me about his investment in share. And that's what got me started in trading in the Bursa Malaysia. So it was doing well, for some time, from 1993, my first share until 1997 is when I learned my first lesson on why is it important to really learn how to do it properly. Right? Some of you may be too young to know about this. Right? How many of you are, I don't want to too old, experienced enough to have actually traded during 1997? Type a me on the chat. If you have traded during this period of 1997 financial crisis, type a me. Okay, no, right? If not, type a no. Okay, I just want to make sure that you can hear me. Oh, okay, good. Oh, CS key, yes. All right, so how does it feel, right? Good that I have some companion of people who have traded during that time. So what was your experience that time? I like this to be an interactive session, right? So we can learn together. For those who have traded, responded that you have traded during that time, how was the feeling at that time? Right? What was your biggest lesson at that time? Okay. Yeah, just wait for recovery. Did they recover? Okay. All right, so before I move on further, let me do a poll so that I can gauge everyone's experience level here. This will help me to tailor my delivery, right? So at least I know whether you are very new or have some experience or long-time experience. Right? Let us have a poll here. Yeah, do share your answer to this poll. Shane, can you help me to launch the poll? Because I cannot see it from my side. Yeah. Okay, yes, now I can see. All right, so this is a poll I'd like you to answer. It's for me to know whether how much experience you have, right? And also the level of understanding of the stock market, right? Which market you have traded, and also which asset type you have traded. All right, so do respond to the poll. Shane, you can let me know when we have most of them already answered, because I cannot see the responses here.
Oh, sure. Now we have 35% of them responded.
Okay. All right, for those of you who may have just joined, do respond to this poll. This is for me to get to know you better, right? So I can tailor the pace and, for the experience level, right? I can explain things in more layman if needed, right? If there's a lot of beginners as well. Okay, yeah, to respond to this poll. Okay, and for the meantime, those of you who have responded, do share on the chat as well, right? Whether you have actually traded over that time. Yeah.
Yeah, half of them already responded.
Okay. Half of them responded. Okay, I'll leave that for a while first, so that more of you can respond to the poll. I hope you are viewing this not while you're driving. Okay. So if you're at home, do use your laptop and don't use the mobile phone. Yeah. Otherwise, you won't be able to respond with both the poll and also the screen will be very small. All right, so the Asian financial crisis was the first one. This crisis, for those of you who are not aware, maybe you're very young right now or you haven't started trading that time, it's a very, very major crisis not just for Malaysia, it's throughout the whole Asia, which also impact the Malaysia currency, right? The Malaysia currency, $1 become 4.8. Okay, I remember the first time when I went to US under my first company assignment, AMD, $1 is only 2.6. I don't think we ever see that back again. Yeah, $1, 2.6. Then it went up to 4.8 during the Asian financial crisis, and many of the Asia market was very, very bad. Okay, so some like tumble like 50 to even 90%, some stocks, right? So it took 10 years to recover the major index, the KLCI index, but some stock never come back. Okay, never come back. So this is the keyword that you need to understand. Then the second one is the US financial crisis, which happened in 2008. Even though it's US financial crisis, it does impact Asia. Okay, because we are very highly correlated to the US market, even until today. Everyone is watching what the US is doing in terms of the Federal Reserve interest rate. Right? So some of you who are very new to the stock market, you may not be aware. The entire world has a very high correlation to the US market. So no matter which stock market you are investing or trading, it's important for you to understand what is happening in the US stock market. Like one of the most significant one is the interest rate decision, right? Last year, I did have some sharing on what we call the 40-30-30 framework, which is 40% of the stock prices are moved by macro condition, nothing to do with the individual stocks. And 30% are moved by the industry and sector, yeah, which is like an industry megatrend. And only 30% is stock specific. So a lot of people are not aware of it. That's why they hold on to the stock for too long. So all these crises are called the macro condition, right? It will bring majority of the stock down, with some exceptions, which I will mention later. So during the 2008, when the US stock market crashed due to the housing market issues, right? The housing market was over elevated, and then a lot of banks, right, get into trouble. And because of that, it will also affect the Asia market, mainly because American companies are global companies. They hire people from around the world. So when American companies have problem, they may retrench, right, the staff around the world. So the whole world that has a high correlation to US, either you are selling goods to the US, or you are having a lot of companies that are employed by American companies, it will get hit as well. And that's how all the Malaysian companies are subcon to the US companies. Right, so because now, like semiconductor, there's a lot of ecosystem, right, in Malaysia that are serving the US product, or even in Malaysia, we have many different consumer goods as well. Okay, so due to the correlation, we will still get hit. So it's important to know that. And this US global financial crisis is a global slower burn, right? Why is it slower burn? It was not as fast in terms of the crash and recovery compared to the COVID-19 crisis. Okay, so there was still time. By right, there's still time to get out, but still a lot of people did not get out. Later on, I will show you some charts on this. Investor has more time to respond to the unfolding event. And last but not least, I want to cover the more recent crisis, which is the 2020 COVID-19 crisis. This is the faster crisis, which is the US Fed react very fast, right? Responded very fast. That's why the recovery fast. If they have not responded fast, the recovery will be much slower, and it will be a much deeper impact throughout the whole world. So the market shifts mainly because the policy changes occurs in days. They were very fast to take action, but don't take it for granted. If they have not stepped in with $1 trillion of stimulus, then we potentially could be still in a recession today. Okay, so this speed also demanded unprecedented agility, right? The question is, if it rebound fast, are you able to respond fast enough? And most important, you don't take for granted. Okay, so now let me check the poll to see what are the experience level. Shane, can you help to share in our WhatsApp group so that I can see their experience level? Yeah. Oh, okay, I can see it right now.
Yeah,
okay.
I shared it here already.
Okay, so now I can see. Okay, some of you not yet started, which is fine. So appreciate that you are still coming in to learn. So it's quite a well-distributed level, more or less equal across all the dimension. Well, there's quite a number of you who have done more than 100 trades. Yeah. So a lot of you are beginners to intermediate, some advanced, and quite a number of market. 93% have traded Malaysia. Singapore, we have US, Hong Kong, and others. Yeah. So even here, yeah, we have almost 50% of those of you who trade Malaysia also trading US, and majority trade stocks. But still quite a number are in crypto. Hope we don't get hurt so much from the recent crypto dip starting October last year. Okay, thank you for all your responses. Okay, so now let me move on. The key message from these three crises is, the market's reaction time has shrunk dramatically over the years, right? From all the way from 97 crisis to 2008 to 2020. So highlighting the need for rapid decision making and also a predefined strategies. Because if you don't have a predefined strategies, you will end up panicking, or you will end up FOMO, like fear of missing out, when they recover and you get back in without a strategy. So our goal here is to study and be prepared, because if you are not, especially for those of you who are new, right? Just now I saw quite a number of you are very new. You probably have not experienced all this before. What is the fastest way to learn? How many of you want a fast way to learn? Like, don't want to learn from all the, the long way, and also paying a lot of tuition fee to the market, right? If you want a faster ways to learn, right, type a yes. If you want a slow way, then you type a no. Yeah, type on the chat. I like all of you to be interactive. Malaysians a lot of times are more passive. We're not the type who are very interactive, but I like the session to be more lively, even though I cannot see you. Okay, so do respond from the chat. Yeah, how many of you want a fast way to learn from the stock market? Yeah, type a yes. If you like the slow way, type a no. Okay, very good. Thanks for those who respond. Yeah, thank you very much. That shows that you are engaged in this learning. How do you think you can learn the fastest? Yeah, how do you think you can learn the fastest? Yeah, type on the chat. How do you think you can learn the fastest? Oh yeah, by the way, for those of you who are Muslim, yeah, selamat berbuka puasa, right? So I'm glad that I hope you have taken whatever you need, right? So they can focus on the sharing right now. Yeah, the shortcut is to learn from other people's mistakes. I have learned the tough way from the stock market, over the 30 over years, pay a lot of tuition fee to the market. So my goal here is, if you learn from my mistake, you will have less mistake. It's not easy to go through this crisis, and crisis doesn't happen all the time. Like, so I like to study past crises. And even though, during the 97, I got burnt. Yeah, what I do is I go back in time. Some people don't want to look at it because they don't want to recall the bad memory. But to me, that is the biggest mistake. It's okay to have mistake. Most important, you don't repeat it. So I always go back in time to see how can I handle it better. What is it that I did not do right? And how could I have got out faster? And when it recover, how do I know what are the stock to get back in? Yeah, don't you think it's very important? Yeah, don't just avoid looking back so that you can avoid the pain of the mistake. Then you will be more painful in the future. Okay. Yeah, so this is where we need to learn, and then we can have the predefined strategies for the future. And every crisis, although coming back to, you need a clear entry exit rules, but it has variations. And every year I'm learning something different, even though after trading for 30 over years. When Donald Trump comes in, right, there's a different learning curve, different president, different learning curve. Even for Malaysia, right, yeah, different different government, different behavior. Okay, but there's a team that we must have a strategy. So let's move on to what we can learn from this Asian financial crisis first. The Bursa Malaysia KLCI composite index, which represent 30 stocks representing the Malaysia market of 1,000 over stock, dropped actually 79.47%. Some of you who have not traded that long, right? Are you surprised with this dip? Because you are not traded during that time. How many of you are very surprised? The index, right? And the index consists of the blue chip, right? Companies like Tenaga, right? These are the blue chip and the banks, right? And yet they can drop 79.47%. How many of you are surprised? If you're surprised, you're not type of me. My question for you is, if you're investing right now or about to invest, are you prepared to handle this? Okay. And it took, some of you may say, oh, I wait until it recovers. Guess how long it takes to recover back to the point before the dip, which is the 3rd March 1997. I still remember this date because that's the date I joined Intel. Okay, I resigned from AMD and joined Intel, right? So this is the date when it's a peak of the KLCI and it crashed 97%. Took 10 years. So should you wait until 10 years to recover? Think about the pain that you will suffer from this dip and anxiety, right? The next one is think about the opportunity cost. Because once you did not cut, what will happen? Your mind will be focusing on this alone, on the money that you lost, instead of cutting loss and focusing on the new opportunity, okay? So let's look at the next one, which is the 2008 financial crisis, which happened on the 14th January, right? I'm taking this peak here. It's a different cutoff time if you're looking at the S&P 500, right? So that will be around the October to November time frame. The peak is happening that time. But for Malaysia, the peak is around January 2008. And it dipped 45%, even though it's called a US financial crisis. So don't take for granted that it won't impact Malaysia. Okay, let's look at the how much it comes down, right? Yeah, all the way, it took about 1 year and 3 months before it hit the bottom. Like, and the bottom, it actually did what we call a triple bottom, right? Look at this part. Yeah, 1, 2, and 3, right? Before it recovered. Okay, then this part is after that, it recovered very fast because the US has a stimulus, right? So if they have not put in a big stimulus, then it will take a longer recovery. Okay, so, and what I like to highlight is don't take for granted that, oh, it takes 3 years, so I need to wait 3 years. There are stocks that never recover. And let's look at the most recent one, 2020 COVID-19 crisis. I did not take the peak area this time, yeah, which is earlier. In fact, a lot of people did not realize. They thought that Malaysia's stock market tumbled only because of the 2020 during that time. It wasn't true. In fact, Malaysia's stock market peaked around the 2018, yeah, before that. So that was when it started coming down, and it was intensified at the end of December 2019. Then there was a big dip, about 25%. Then it recovered and it goes sideways for quite some time, right? So it took 7 months to reach back to the same level, right? 7 months only. However, it differs depending on the stock. Okay, so let's look at and it has been going sideways. So if you are buying any of the index stocks, right? So your performance will be sideways for quite some time. Look at that time until 2026, right? It's still more or less the same level. So let's look at the specific stock, right? Even though the index only dropped 25% during the COVID-19, these stocks, I think, is very popular. Top growth, right? Actually went down 94.3%. It's almost gone, okay, almost gone from the peak. And still have not recovered until now, right? Let's look at when the peak happened, which is in 2020, is when it peaked. And now we are at more than 5 years, right? Yeah. So do you think it's worth to wait until it come back? What do you think? I'd like you to answer. Do you think it's worth to wait until it come back? Yeah. Okay. So the next question I have is, do you think it will ever come back to the peak level? It won't, right? So I know this is sensitive. I'm not sure whether any one of you have this stock at that time, right? It would be a very painful lesson. But let this lesson be a changing moment for you to, break the bad habits. Okay, sometimes if it's not painful enough, we may not change, right? And how many of you, if you're okay, right, honest enough, you can share that, oh yeah, you do have the big lessons from this stock, like Top Growth or Harta Lega. Anyone here? Yeah, I have quite a lot of students, and quite a number of students actually share this experience with me. When I was talking about this stock, yeah, he said I was holding that time. But at least they learn from the mistake. Okay. Right now we have another pandemic, not that big, like the measles and the TB is coming back. Okay. All right. Yeah. Thanks. Yeah. Thanks for sharing. Yeah, we all learn. So let's move on to the next stage, right? So it is not just about Top Growth. It's also the other growth company like Harta Lega, also 93. This is what I mean by the 40-30-30 rule. 30% of stock movement are affected by the industry level. Okay, so when there's a crisis at the industry, everything goes down. But the most important lesson I'd like to share with you about this is on the section 2, right? So this is the part I like all of you to take note of the lesson, right? Make sure they have your writing pad, right? Whether it's physical or electronic. For those of you who have gone through the 19, any of these crises, I'd like you to share first before I share my lessons with you. What are your biggest lessons from these crises, from your personal perspective? Like if you have traded over that time and holding some stocks, and for those of you who have not, based on what I've shared with you, what are some of the key learnings that you have gotten from that? Yeah, what are your insights? Yeah, do type on the chat. Like otherwise, it's just a download, right? You may next time you may not learn from this lesson if you don't start to think about it. Anyone? Just type on the chat. What are the lessons that you learned from these crises? Yes, very good, Shirley. Yeah, must have a cut loss value. Very important. Stop loss is important. Yeah. Yeah, either have a stop loss physically or mentally. These days, there are more brokers that have a stop loss. During that time, there's no. Yeah, you have to call the broker to cut loss. Yeah. Don't hold stock for too long. Okay. Right, I will debrief about that. Put stop loss, one, cancel other. All right. So let me move forward on the sharing here. As I was going deeper into this study, because I actually had once upon a time, I think start this initiative called Ask Kathlyn Anything. Like, so there was someone who posts, can you share about top growth stock, right? Should I cut it or can I still hold? So that was the time I study about the supply chain. I do not have top growth stocks, yeah, because I was focusing. I really shifted to focus on the US market at the time. I do monitor, but I still monitor the Malaysia stock because about 30% of our students started from the Malaysia stock market. Some of them are still holding on to the still trading Malaysia stock, but they use what we teach them to disposition them, right? Those that they should not hold, because what we teach can apply to any market. Okay? And they learn a big lesson on what they should not have still keep until now. So what I want to share with you is this analogy called the growth trap. Right? In another context, it could be different, but I'd like you to think of it as an analogy only. Right? So when it comes to different crises, it may not be growth, but it could be something else. Like right now, it's software. Okay, yeah, software is another trap that has happened due to AI disruption. So for the growth stocks like Top Growth and Hartalega at that time, the most important mistake some of you have highlighted is the mentality of wait until it comes back. And this is actually very, very dangerous, but it's so common. After teaching for 18 years, right? I traded for 33 years, but our company has already operated for 18 years. We have close to 8,000 students already. So I can see a pattern of this mentality, which is quite pervasive, especially for those who have traded before they join us, right? Rather than a green, what I call that, a white piece of paper where don't have bad habits. So this is the part. During that time, many investors held on to the growth stock, hoping for a recovery that never materialized. Because we always don't like to feel that we have made a mistake. Okay, we always want to, at least if I buy here, I want to wait until go back there to sell, right? Because of the feeling that I don't want to recognize the loss, the emotional attachment that don't want to feel making a mistake. So if you go back, at least don't feel so bad. So this is one very important behavior or thinking process that you must get rid of. Because if you continue to think that way, you will have a risk that what if the stock never go back to the level that you buy, right? Yeah. And this will definitely be a case, right? Not all stocks can come back to the level. Why? Because market dynamics can change. So the core lesson here is a stock doesn't have a memory, right? Hope is definitely not a strategy. And cutting losses when the investment thesis break is the important one. Let's say you need to ask yourself, why do you buy Top Growth in the first time? Like if you bought it at that time, why did you buy in the first time? What is the thesis? Thesis means the rationale behind the decision, right? Did you buy it because you are foreseeing, because of pandemic, right? There will be a lot of demand for growth. And you are seeing, the pandemic is very serious, right? Hospital are fully packed and, there's even not enough capacity. So from that perspective, right, you could be buying the vaccine companies or the growth companies, or even the masks, right? Those are producing masks. So the thought process could be right, but it may have a flaw. Okay, what is the flaw here? First, many people may not consider the price that you get in, right? Has it already factored in all the upside that the company could gain? Okay, are you buying in at the right price? It's not just about, oh, I think growth stock can buy, then you buy. That means this is a substandard methodology, right? It's just based on gut feeling. And that's where you do not know whether you're buying too high. The other part is the exit point. Okay, so let me start from this beginning first. This become emotional investing because you don't want to miss the boat. Other people say, oh, it's good, right? Then you buy. First, you need to define your entry and exit rules and adhere to them. The moment your thesis is invalidated, let's say you buy because there's a strong demand, right? You buy because, let's say, demand more than supply, right? You need to quantify what is demand more than supply. Do you actually do any research, right? These days, it's easier to do research compared to last time, right? Yeah. But if that is no longer true, let's say instead of demand more than supply, it becomes supply more than demand, then your thesis is wrong. Then you must cut loss, right? Because if you don't cut loss, it will continue to go down because your thesis of demand over supply is already wrong. The question is, do you even have an investment thesis, right? Your rationale before going in, okay? So let me show you the subsequent. There's a lot of lessons from this top glove. So this can apply to other areas, not just top glove. The next one is, this is something that I learned over many years of market cycle, that I realized that the market is different from the economy. Many people look at what happened in the economy to decide whether it's time to buy or sell shares. But the stock market is a forward-looking machine. I always tell our students that the stock market is 6 to 9 months ahead of the economy. You may want to write this down, right? The stock market is 6 to 9 months ahead of the economy. So when you want to buy a stock today, right, you're looking at whether the stock will go up, right? That means you're looking at what can cause the stock price to go up. You'll be looking at the recovery of the economy or consumer spending. Okay. Yeah. So that's why it's a forward looking. You don't buy it because, wow, now it's already very rosy. Everything is bright. Then the stock is too high. Okay. So during the time when the economy is still very bad, haven't recovered, is when people will start to disposition their shares already. So one of the lessons here that I'd like you to take note of is the timing. The top growth stock peaked in August 2020. The pandemic actually happened in late February when it was declared, right? Around March, the WHO declared that it's a world pandemic. But the stock market, especially during that time, I was monitoring the US stock market. The big dip for the S&P 500 happened around 22nd to 23rd of the February 2020. Okay, so then it reached the bottom around in 1 month. So during that time, the MCO, remember we have a lot of MCO, we have a lot of lockdown, right? So the full lockdown and the partial lockdown happened on and off in 2020, 2021, and 2022. But top growth stock actually peaked very early in August 2020, when if you look at the surrounding, the news, right, the lockdown is still happening. Okay, but it peaked during that time, and after that, it started to decline. You can see here, August is when it started to come down, when the pandemic is still very serious. So a lot of you may make this mistake where you're looking at what is happening and decide that I can keep my top growth stock or Harta Lega, because so many people are still wearing masks. The hospital is still under capacity, right? You look at all the statistics are still very, very serious, okay? But the stock has already peaked. Okay, this is something very, very important. So why does it behave this way, right? Because the market look forward anticipating that in the 6 to 9 months, right, the demand will start to drop when the pandemic can be contained better. But how do they know whether it can be contained? Of course, it could be based on whether there's any directions of drug discovery, right? Like the vaccine deployment. Are there any vaccine that's successful? It's just pending deployment. If it's already discovered, pending deployment, then they know that it's just a matter of time it can be contained. All right. So the waiting for fundamental news to see that it's fully recovered before you think that your stock is right to sell. That means you're waiting for pandemic to be over. Then only you sell the stock. It's already too late. The big money, which are the more experienced fund manager, they don't think like this. The big money moves before the news hit the market. Okay, and technical analysis can often signal the weakness early. How do you know they are selling? You look at the technical chart. So the lesson learned here is do not use fundamental news alone to get out. It's too late. A lot of times there's no news yet for you to get out. The news will get you to hold on because pandemic not over. But the chart tells you, like over here, the chart tells you that people want to sell. Okay, yeah, like this point here. Just hold on. Not sure why my drawing cannot come up. Okay, let me just close and start off my pen again. Right, I like you to internalize this. Yeah, do you understand what I'm talking about? Right, so if you understand what I'm talking about, do type yes on the chat. Okay, this is a critical lesson. Sorry, just give me a moment. I need to restart my pen. Yeah. Right, write down what you understand from what I say here. Okay, I like because this is something very, very important. If you're very new, you may not understand what I mean here, but but I hope you get this here. Yeah, so this is what I mean. What I meant is this part. Now my pen is back. When it's peak, if you read the news, if you read all the market news, it will still show you all the COVID-19 figure. Every day the cases is still going up. Right? If you see every day the news going up, will you sell your top close? Will you sell? Do you understand the dilemma here? Right? So the important lesson here, you may think that, wow, the pandemic is not over, the demand is still there. Why should I sell? Maybe it can go up another $10. Right? Let's look at where it was earlier. Why the people have the greed, right? It was below $2 and it went up to close to $10. Right? It's close to 10x, probably about eight times, right? It's a lot of money. Then you see, wow, looks like I'm going to make a lot of money because, those who miss it here, those who miss, right, the people here will be bragging about it. Then the rest cannot tahan, I must buy. Then they buy here $5. Wow, then, over here they say, wow, very fast, I $5 went up $3. The percentage return is very high, right? Yeah, if you buy at $5, it went up to 8, you're making $3. 305 is 60%. It's a lot of money within a short time. Look at this. This is still just a couple of months. Then when it peaked here, those who did not buy yet, they will want to go in. And they were hoping that it still go up further because they may be looking at the pandemic not over. The demand must be still high, right? All those people who buy make a lot of money already. So this is a flawed thinking and you need to be very, very careful about it because what is missing here? What is missing in this thought process? I'd like you to type. Because the way I teach, right, I don't like to spoon feed. I like people to think because the market is dynamic. If I spoon feed you another situation, you don't know how to react. Do you agree? Yeah, so I want to serve you. That's why I want you to think. I can just download everything and within half an hour, I'm done. Okay. What is missing from this whole thinking process? Are you going to buy at whatever price? Right. So is this the right valuation you should buy? Yeah, so that's the next level. What is missing here, right? Let me just recap back. The first part is wait until it come back, right? You must get rid of it. I hope you're writing all these notes. Yeah, you must get rid of this because sometimes it never come back. The second part is the market is a forward-looking machine. Don't wait until the economy and the fundamental news to exit. The third part is the stock price. Has it factored in the growth rate in the future? So this is very, very important lesson, which is the earnings growth versus the stock price growth. At that time, the top growth stock price increased 502% in 6 months. Right? Let's look at this, 502% in 6 months. Okay. Yeah. And that is from 20th January, right? If you look at the bottom here, the start over here, right? This was the start, right? Which is this date, to the peak here. Yeah, this is the peak. Okay, this date. Right? It went up 501%. Huge money, right? 6 months, 501%. So the most important question you need to ask yourself when you see such a behavior in any stocks in the future, has the earnings grown 502% to justify it? Okay? Has the earnings grown 502%? What do you think? During this period? No. So what does it mean if it's the no? Then the next question I have, you may see that, oh, but it's going to make a lot of money in the future. My question is, how long do you think it will take them to grow 502% in their earnings? Even given that you sell so much, right? Because it doesn't mean the profit margin is very big. How much quantity you're going to sell? And is it going to be forever? Is the pandemic going to be forever also, right? Yeah, so this is a seasonal demand. So what if pandemic is over? Do you think the demand is still going to be there? Oh yeah, some of you answer, right? It can take 2 decades. And 2 decades, is it, what do you call it? Is it a certainty that in the next, even 20 years, they will make back the 502%? Is it a certainty or there's risk? What do you think? Is that a certainty they will make the money? No, it's just a probability. So if you're the big funds, what should you be thinking? Wow, originally when I buy this growth stock, I don't expect it to go back so up. But because of all the euphoria, wow, straight away, it went up 501%. I don't have to wait for 10 years for this stock to make the money. This stock already, the stock price has already go far beyond what the company can make. So what should you do instead? It may not be sustainable, right? The stock price already pay for forward earnings for don't know how many years, which may not materialize. Yes, you should get rid of it and go for holiday. Yes, I like it. Yeah. So this is don't you think this is a very important lesson? Because if you're in the midst of it and you don't have a rational thinking at that time, you may get caught in the euphoria. Yeah. So this is where the big funds understand this. This is not sustainable. And you might as well get out and then find one that is not overpriced, right? You need to find one that is still at the early stage, is not overvalued. Yeah, sell this and buy a cheaper one that still have the potential growth. And not just buy cheap, buy the one that is has the potential, okay? Yeah, so what if, right? It's easier to take profit. What if you have bought here, okay? What if you have not bought, you're not buying here, right? Here, take profit, of course, right? But you see, the moment, this is called the phases of the trend. We have a trend trading class, we talk about the phases, right? This is the phase 2. This is already phase 3. When I see choppy, it's already a dangerous point. The big funds are getting out, so you don't go and get in at this point. But they cannot sell all one shot. They take months to liquidate, right? All those big funds they have bought here, they take months to liquidate. So you may think, hey, when it comes down, the support still hold, so I think can still buy. You are going to be caught in the trap. Especially the risk is you're already paying for forward earning. Okay, so by the time they have sell enough, then it break. Then you're supposed to get out already. Right? So you must have a technical exit point. Fundamental is not good enough to exit. Fundamental can help you to understand this part, that you are already paying too much for the stock. That's the fundamental. It gives you a warning, and it gives how significant overvalue it is. Okay, so the warning is this from fundamental. When the stock price has grown much faster than the earnings growth, there is high risk of profit taking. So you must manage your greed here. Okay, start to at least, if it's so significantly overvalued, like one thing is if your platform gives you a stop loss, you move up your stop loss so that you don't get emotional, right? The moment you trip that level, then you're out. Okay, because is it harder for you to cut loss yourself, or is it easier for you to cut loss yourself or let the system do for you? Right? It's always easier for you to look at the technical level, put a stop loss there. If you breach this level, you're out, no emotions. Because when you look at it, you still have hope. Okay. Then professional traders know when to get out and move on to better deal, right? You don't have to hang on to this deal because it's always about better deal, right? We always teach our students about reward over the risk. Okay. Is the reward versus the risk still make sense for this stock? right? If not, then move on, right? Close this and get a better deal. Okay, does it make sense to you? Yeah, this is actually a very important lesson. I see a lot of people caught in this. Because you see, it went up 501%. After that, people who bought here, right? They still over here, when they drop, they don't want to cut loss because they still hope that it can come back here. So this is a very flawed mentality, but it's a very common mentality. Right? If you have this temptation to think this way, you need to ask yourself, what has to happen for it to go up here? Okay, because the stock price here already factor in 502% earnings growth, which will never happen. Then if that's the case, then it will never go back there. And then you're looking at, is it a 0.1% hope for it to go up there, right? That means you need to expect that more people are having the euphoria, right, of a greed to chase it up there. The probability is very low. You might as well get rid of it here. Even if you have bought it here, right, once you get into your senses, right, and it broke support, you still need to get out. Imagine here, if you got out, you would have, maybe you sell at $7 compared to $1, right? You save $6 of downside. At this point, when you're out, even though you may lose some money, assuming that you're bought at the, let me clean my chart first. Assuming that you chase it at the wrong time, right? You bought it here, okay? Then here you lose money. So this is one very important lesson. People don't like to get out when they are losing. It's a very wrong psychology, right? In fact, you should get rid of the loser first. Okay, the winners, you move up stop loss. You must get rid of the loser first because something is wrong with the loser. It's better that you close it, then you have that freedom of emotions to look for another stock. Your new stock can recover this stock. Okay, your new stock could have recovered the losses from this stock rather than hoping. So a lot of times I chat with our students, it's all about probability, right? What is the probability of this to go back here? If it's very low, you cut it, then you find another stock with a higher probability to go up with proper research. Does it make sense? Yeah. So that's why I'm very, very passionate in psychology. In fact, we have, really, it's my most passionate course to teach is the psychology part because I've seen so many people making this mistake. And also, when I look back at, all the mistakes I've done in the trading. Okay. So now this is the important lessons. I hope you write this down. The next part is people overlook the global competition. Like things are changing, right? If you look at, just the Malaysia part of the news and that's only if you even monitor, you may not be aware that at the time, the global dynamic have shifted. It is already the end of the Malaysian monopoly of growth. Malaysia used to be one of the top provider for growth in the world, top provider, but it's no longer the case after the pandemic. Okay, so this is where the China factor come in. Chinese manufacturer, like these two companies, Inco and Blue Sail, rapidly increase the supply because China was very aggressive. And when they build a factory, it's no joke. Okay, they can build a hospital in 2 weeks. Okay, yeah. So they can build a factory. Like Tesla factory was built in 1 year. If it were built in the US, it takes 3 to 5 years. Okay, so they built a factory, Tesla factory, very advanced factory in 1 year. So when they built a manufacturing to build growth, and they were able to do it at a significantly lower price, this undercut the perceived monopoly already. So when they come in, people will buy from the cheaper source. So that already reduced the demand for top growth, right? The lesson is when you buy into a stock, you need to understand the fundamentals, especially something that affect the growth of the stock, right? And for supply demand, don't take it for granted, right? So actively monitor global competitors and international market trends, not just the local news, especially when you have a big stake in it. A strong domestic position can quickly erode due to external pressure. Especially right now, right? Donald Trump wanted to move a lot of manufacturing back to the US. The whole supply chain in the world is shifting, right? It used to be most of the factories are in China, right? So now a lot are moving to like Vietnam, some to Malaysia, Indonesia, and Thailand, and also some of the core manufacturing to the US. So the whole supply chain are shifting. And the whole competitiveness on some of the Malaysia companies would have shifted already. Like, don't assume things will be the same. Don't look at the last 5-10 years and assume they don't change. And with AI, it could be disrupting, right? So this is one lesson that you need to write down. What is this? Yeah. How does it relate to today? right? Sometimes you may not relate it directly. You may think, oh, Kathlyn is talking about some outdated stuff, right? It is not outdated if you know how to correlate. What about the disruption in AI, right? With AI, do you think the company will advantage will stay the same? What do you think? Yes or no? With AI, do you think all the companies who are used to be very competitive can still be competitive? No. So the question is, are you looking at that for the company you are investing? What are the disruption, right? Okay, so let's move on to this. This is the reality, which is the supply-demand reality, right? So the top growth was entering the red ocean, not the blue ocean. Blue ocean means you're still in the new demand forces, and red ocean is already sunset industry. So during the pandemic time, you can see here, over here, I still remember, right? If you have lived over the MCO time, where this shut down, right? People cannot go out, right? Over here, a lot of people still need to wear masks. They are still partial lockdown, right? People will perceive that the demand is still there. But this is the quarterly net profit margin of Top Glove. So a lot of people, they buy, but they don't even monitor, is this company still making money? They don't even look at the quarterly earnings report. And if they have looked at it, the warning sign has already been very glaring this time, right? So it peaked and then it started to drop. Then this is a very big drop, right, in 2021. So then it becomes lower and lower, right? Then you know that it's no more hope already for it to go back up. And this was the time where the China competition kicks in, right? A lot of supply. So people are no longer ordering from Top Glove. They're ordering from China because the China growth was much cheaper than the Malaysian growth. Okay, so what do you learn from this lesson? I'd like you to type on the chat. Okay, right. If it's a commoditized market, the lowest cost producer win. And this dynamic eroded the profit margin for Malaysian growth company. So that's why it's important to understand the market saturation and competitive pricing, right? Don't take it for granted. And especially for something that is in very high demand, right? A lot of companies would like to eat a pie, or cut, take out one of the pie. And you need to be very aware of it, okay? So now let me summarize out of all this lesson. I hope that all of you are participating. If you gain any of these insights, right, do type on the chat. Okay, so these are the key mistakes on the left and what to do instead, right? So one of the key mistakes for a lot of people is they hang on to a risky belief. Yeah, and there's a lot of belief, because I teach psychology course, I know there are at least 30 over wrong beliefs that people have that cause them to do the wrong thing. And one of the most common belief is called it will come back, the most dangerous belief. So number one thing I want to help our students to get rid of is this belief. There are a lot of belief, like, for example, oh, bank stock will never die, the government will always bail out. All these are very dangerous. I've seen bank failures as well. Didn't come back. Okay. Yeah. Like bond market is safe. Bond can also be risky. I've seen bond collapse, Lehman Brothers bonds collapse. Okay, so watch your belief, challenge your belief, because your belief is the one that causes you to take a certain action. Okay, always chat with our student on this. You don't trade what we teach you. I teach 8,000 people, but not everyone take the same action. Why? They bring their own beliefs to it. So as long as I teach you the entry exit rules, right? I said, okay, this is when you get in, this is when you get out, this is where you put your stop loss. But they don't want to put a stop loss because even though I said put a stop loss, it's part of the process, but they have a belief that it will come back. They don't want to recognize the loss. They will still not follow what I said. So people don't trade what they learn. They trade what they believe. So you need to make sure that you challenge your belief. So you can, especially those of you who have traded before, right, and can relate to what I'm saying on holding on to a stock too long, go back and ask yourself, what beliefs were the one that you have at that point in time that holds you back from taking the right action? And then you need to challenge that belief and get rid of it. Otherwise, in the future, with the same belief, you will take the same lesson because you have hope for it. Okay? Yeah, I don't have the time to do an intervention. Normally, I will do it to the extent that you break the belief and you form a new belief. Then only you can get rid of the bad habit and form a new one that can help you be consistent. Okay? Yeah, so what can you do instead is have a clear stock selection and an entry exit rule. So the stock selection is very important because you need to make sure that the company is sustainable if you are investing, unless you're just trading. Right? If you're just trend trading, you make sure that you have a technical entry exit. Okay, so even though you select the best stock at that time, you still need to have an exit rule. Why? As you learn from the top growth, it could be at that time, it's a prime time. But if the stock already went up like 8 times of the stock price originally, and it's already making future money, you still need to have an exit, right? Otherwise, other people will get up faster than you, right? Even though it's a reg stock. The other one is if the fundamentals already not aligned, you need to get out. But the stock chart is the one that will tell you first, okay? Then the other one that's very, very common is averaging down. It's a no-no for me, right? This is like a golden rule that I share with the students. I know some teachers do teach that, but let me share with you the rationale. And this was actually brought by the unit trust industry, where people said dollar cost averaging, and people abuse it in when they trade stocks or invest in stocks. So why dollar cost averaging is a very different concept, where you fix an amount. Let's say you have 12,000 to invest, right, in a unit trust. Every month you put in 1,000, 1,000. This is for laymen who hasn't learned about the stock market, right? So because they don't know how to time, they don't know how to research stock, they don't know how to look at the technical chart on entry exit. So this is to make sure that they don't end up buying one shot very high, okay? So it's to stagger, but what you were getting will be average result. Or you could be even getting in the whole year, let's say it's the peak before a crisis, you end up also buying very high, okay? But people use this concept and call it averaging down. That is called dollar cost averaging. That means fixed amount every month, okay? But people use it as averaging down. It's the more the stock goes down, the more they buy because they thought they buy cheaper. Why this is so dangerous? Because when you buy a stock like Top Growth, it already came down, you're already at a loss, you're compounding the loss. You keep on topping to a losing position. The first position already lose, you top another second losing position, and then you add another third losing position. Of course, in your mind, you're thinking of averaging your buying price with the hope again that it will go back up. Remember, hope is not a strategy. Okay? Yeah. So what should you do instead? We never buy on the way down. Okay? There's a rationale for that. And because it adds to significant risk to already losing positions, you should add on the way up instead. What is add on the way up? You move up stop loss from your previous position. So even a hit stop loss, you have zero risk, then only you add. Right? This is what we actually taught our students with a clear entry exit rules for the trend trading. You protect profit before you add. The previous trade should be zero risk first, then only you add. So anytime you are just adding another new 1% risk. Okay, the next one is bottom fishing, the cheap mentality. Wow, I want to buy because it's cheap. Like Top Growth is cheap. It's always cheap for a reason. You may see it as cheap because you look at the dollar value, it's $1, right? So the lesson learned is this. Don't look at the dollar value on whether it is cheap. 10 cents is cheap, right? Why is 10 cents? Nobody wants the stock. That's why it's 10 cents. Why it's Top Growth $1? It used to be $9. It's because now people don't want it. That's why it's cheap. So if you just look for the absolute value, you are buying cheap stock that nobody wants anymore. Understand? Of course, there's a subset of people will still hold on to it. And people, so what is considered cheap? At that price, it can be considered expensive because the business is losing money. Okay, so when it's losing money, even $1 is expensive. 50 cents is still expensive. It's not worth it, right? So don't buy a stock so must be clear on what drives the profitability, growth, and sustainability. Only, okay, you're getting it at a low valuation, right? There's a way to analyze whether it's a good value. But no matter how low the value, it must have the high probability of growth in the future. Profitability, growth, and sustainability. Sustainability means the profit and growth can be sustained, right? Then only you buy when you see a good value, not just because it's like 50 cents, okay? Yeah, the last part here is in denial when the market, industry, or company dynamic has changed. Like this one I mentioned, you need to monitor if your thesis, right, for the demand and supply has changed or not. If not, you need to cut loss when it's invalidated. Okay, so I hope you learn from these lessons here. So the next one is how do you prepare for the future, right? This is the past. So I'm going to give you some bonus, right? Cool. How many of you like bonus? This is not supposed to be not part of the sharing, but since I've done a major market update during our annual symposium where we run once a year, where we cover the whole, what is the bigger mega trend. Like I shared 8 mega trends, and these 8 mega trends drive the next level industry. I'm a very top-down person. So I look at all the mega forces, and from there I look at the industry, and then what is the best stock within the industry. Then I look at the macro forces. What are all the things affecting the macro side of it? And that will actually affect the stock price movement, right? So since I have the information, I'm going to share with you so that you know what are the macro events that you need to manage the risk, right? So the first one, this is a summary on the next page. So let me recap the concept, because earlier I don't have the slide when I talk about this 40, 30, 30. No matter what you invest, right, you need to take note that 40% of the stock price is moved by overall macro sentiment. So aligned with what I shared on the COVID-19, those are the macro, right? There's a global pandemic. As the global pandemic happening, then because it's so severe, then the government step in, right? So there will be monetary policy, right? In the US, there's a monetary stimulus printing. That's why the US stock market recovered so fast. And Malaysia has the fiscal stimulus, right? All these, cheaper loan or subsidy to help the businesses to recover faster, right? So, and all those hospitalization and also the vaccine, right? The free vaccine that we get, right? So those are the stimulus. So these are the ones that affect 40% of stock price. Okay, then the 30% is the industry and sectors, right? So during the time, pharmaceutical is the industry that goes up. The F&B is the one that goes down. So in this event, you need to know what benefit from that event and what it has a negative impact from the event. So actually, one you can trade up, the other one you can trade down. And then you choose the company. Let's say you want to trade out, you choose the best company from the industry that benefit. Okay, and if you want to short trade down, like in trading, you can trade down as well. Then you short the one which is the worst. Okay, like airline is bad during that time, right? Nobody can fly and they have to take up very huge loan. Okay, so that's the key breakdown. So then you need to understand moving forward, the 40% that you need to manage is this one. Number one, I think you can already see this in the news, geopolitical tension. We have increasing global and regional tension. So then what risk do you need to manage, right? So of course you can look at the, if you have already existing portfolio, then you need to assess how is this global tension going to impact you, right? So one of it is oil price. When oil price goes up, inflation goes up, interest rate goes up. So do you have any stock that's sensitive to that? Then you need to get rid of it, okay? Right, then you need to, if you have a portfolio, you need to have some composition where when you have the war, right, those you have some stocks or industry related ETF that will go up as a result of war, right? Then the second part, I have to go quite fast on this because it's just bonus. It may take me this whole presentation. These few slides originally with many slides are actually supposed to be 1 hour. Okay, but I give you just the high level. The second one is the tariff and sanction impact. Are you investing in the stock that are affected by the supply chain shift, right, due to Donald Trump tariff? Okay, and because that will affect the global fund flows. The third one is global demand and supply. China is still in trouble in terms of consumer demand. Okay, it has a bit of a what we call an overhang. And also there's a lot of commodity that are being sanctioned right now, which will affect, even though you may invest in a company that can sell a lot, but then they don't have enough raw material or raw material price go up, right? That can also affect the profit margin. Then the US Fed decision is the most important right now because of the war. People are anticipating the US Fed may not cut. So what is the implication if they don't cut? Interest rate stays high. And what does it mean? Right. Then the next one is currency fluctuation. Due to that, remember our ringgit strengthened a lot against the dollar. But because of this war, we expect the inflation may stay high due to oil. So, and that will keep the US dollar high because US may not cut interest rate this year. Okay, until things settle down. So, and this strengthened US dollar means weaker ringgit against the US dollar. So how would that impact the stock that you have? Okay, then the technology disruption with AI, right? So how it's going to affect the stock that you have if you are holding, because some of you are trading US market, you can see software stock and came down a lot, right? Yeah, now some of the stocks are near bottoming, but you need to choose the right one. And a lot of the companies like Meta, Google, Microsoft, they are spending a lot on capital investment, and the return may not come in that fast, right? Cyber attack is a very, very high risk. You need to be prepared. Debt sustainability for the US government, and it's highly depending on the inflation rate. Leadership risk. Remember, we have what if something happened to Trump or Xi Jinping, and now we have the Middle East, right? Yeah, the leader was assassinated already. So when those things happen, have you ever think about what will impact like how it impacts the stock market. I'm not here to scare you, right? This is what I do, okay? Risk management, okay? So if you don't understand all this and what's the implication, at the very least, you have a stop loss, it will take care of it. After that, you go and find out what is the root cause, okay? Whether I can go back in. If you don't understand, it should not stop you from too much fear for investing. Our goal here is to learn, build up competency to manage it. And if you don't understand all these things, look at the technical chart, have a stop loss, okay? And last but not least is what are the black swan this year, right? This year, we are likely going to have a lot of global tension, potentially more significant prolonged war between US and Iran, okay? So what does that imply? Very, very high chance the oil price will be higher for a prolonged period. Okay, so these are the key macro risks. Are you taking care of that? If you don't have a stop loss, then you're not managing a risk at all. And do you balance back, right? Some of these risks actually can be your advantage, yeah, because some stock actually go up because of that, like defense stock, right? Like oil stocks, consumer staples, okay? Yeah, so that's the important risk. Then the next one is, what does it take to be consistent? Like, so you can see there could be many, many events. The most important is you need to have a framework. So we have a framework that I personally use and what we teach our students, right? So it's the first one is you must be systematic. So we have like 4 trading style. Investor, there's a way for us to screen the stock, how to get in, how to get out, right? How much to buy for each stock, portfolio management. And for trend trading, there's also clear entry exit rule, a process. Swing trading, a process. Intraday, there's a process. Very clear, right? So you don't have this doubt. And it takes me many years to develop this process, right? To make it systemized. It was for my own use initially, okay? Versatility, you need to know how to handle different market conditions, as you can see right now. And also, you need to have a money management to stay safe. And last but not least, you need to manage your psychology, okay? No matter what you have here, you don't follow, it's still bad. So let me just share with you, right? What is systematic? A clear thesis, the why you buy the stock. Why do I buy this stock? What is my screening criteria? Right, so you know, okay, when your criteria is invalidated, you should be out. A clear entry exit rules for the respective style. Versatile, you know how to use the right instrument or right style. For example, now, if it could be 2 days up, 2 days down when all these news happen, it could be time to just trade intraday for the meantime, or you can use hedging, right? Portfolio hedging, which I use a QQQ put options to hedge my account in case, you know, my tech stock comes down, then, you know, I will still be protected. The last part is clear risk management, right? How to diversify in times of war. What is the max risk per trade? What if a few of your stocks go down together, right? What is your concurrent max portfolio risk? What is your stop loss rule, right? How do you put your stop loss? When do you move up a stop loss to protect your profits, right? When you have all these clear, then you're not emotional anymore, right? It's a very systematic way. And when you're systematic, it's more predictable. In 100 trades, you consistently do this, you cannot guarantee the next few trades will be a winner. But you consistently do it in 100 trades, you will make money, okay? So last but not least is still the psychology. I can teach you everything, but you don't follow, you still have your own beliefs, you know, stubborn, then cannot help, okay? So psychology is still very important. All right, so this is why I'm very passionate in this. I have gone through enough mistakes my own. I've seen a lot of people still have this pattern. So our goal here is to, you know, help more of you to be consistent, right? Learn it, build your competency, and you will find that it's really worth it, right? At the end of the day, we are not here to gamble, right? We are here to be consistent, right? So that we can really build the financial independence for ourselves and our family, okay? So follow a framework so that it can sustainable and also you can achieve your account growth. All right, so that's all I want to share. And now I'm open. Yeah, apologize, I need to speed up a bit towards the end. Now I'm opening up for Q&A. Yeah.
Right. Thanks,
We have
Kathlyn,
about about 10 minutes for Q&A right now.
Yeah, thanks, Kathlyn, for sharing with us the past crisis, which was like 6 years ago, COVID-19, and what lessons we can draw from the past crisis. If
Okay. Mm.
Siu Kong, do you
Yeah, it seems
consider
like
the
I'm not sure
present?
whether it's your side or my side. It hangs for a while. Yeah.
Is it? Can you
Yeah.
hear me well?
Because I see you frozen just now. I'm not sure it's me frozen or you frozen. Yeah.
Kathlyn, so the
Yeah.
first question is, do you consider the present Middle East conflict a crisis? If so, is it time to sell some, if not all the blue chips?
Wait, do you, the present Middle East conflict, is it you're talking about?
Yes.
Okay, yeah. So, okay, so do look at the chat, right? If you want to learn a systematic way to approach the market. Okay, so for the Middle East crisis, right now, I won't say that you need to sell off all your blue chip, because I don't know what blue chip, right? If you post on the chat, then I can take a look at it. What blue chip are you referring to? First, you need to evaluate whether the stock that you hold is positive or negatively impacted, right? If you are holding a Petronas, which benefit from oil price, then it's different, right? Yeah. But if you are holding a let's say housing stocks, then it will be in trouble, because inflation, right? The oil price is going to affect inflation, and when inflation goes up, the Fed will not cut interest rates so fast. And when they don't cut interest rates so fast, is it good for housing market? No, right? So you look at it. If the main thing right now is likely inflation may stay sticky or high for a prolonged period, so the Fed likely will not cut interest rate, because the US employment data is still good, right? Unemployment is still low. The consumer confidence was still healthy. I monitor those data that the Fed monitor. So if they don't cut rates, that means interest rate stays high. There's certain industry that will not benefit or will be negative, right? So what are those? Yeah, you type on the chat, because I don't like to spoon feed. Okay, I like you to think first, then I will answer. Which industry will be negatively impacted if the interest rate stay high? Yeah, people will not spend so much money when interest rate is high, right? Or when oil price go up, it will erode some of the company's profit margin. What industry do you think it is? Example, airline, right? Airline use a lot of oil, right? Yeah, although they normally hedge it, they buy oil futures, right, to lock in the price. But we don't know which airline were affected. But given if it's a sustained, prolonged war, right? Let's say because Donald Trump already said it will take about 4 weeks or plus, right? I think even you look at the Russia-Ukraine war, how many years has it last already? Russian-Ukraine war. 2022 until now, right? Still haven't ended. So if it's a prolonged war, it may impact those stocks that are affected by stock price, like anything transportation, airline, housing market, mainly because the interest rate may stay high, logistic, right? Just think about anything that use oil, or anything that depend on interest rate, like properties, right? So if interest rates stay high, because Malaysia, you have to consider the Malaysia interest rate, not the US interest rate, right? Yeah. So I can say from the US standpoint, if the interest rates stay high, it will not be good for the housing market. It will take longer to recover. But that is a standalone, because one particular industry can be affected by many sectors. But this one already not in favor. Then there's this factor called sector rotation. When it comes to uncertainty, then where people will rotate to. When there's war, what industry will benefit? When there's war, what industry will benefit? The one that produce the weapon, okay? Although I don't buy those stocks, I don't like to buy companies that kill people, okay? But some people, if they don't mind, they can buy those the ETF that consists of defense stock, okay? Because those will go up in times of war, so it shelter your portfolio. Consumer staples, right? When it comes to uncertainty, people still need to eat. Yeah, those will not go down so much. Yeah, so your portfolio is more hedged. But you also can take advantage of the decline, right? Now it's still on the high side. So you want to be prepared for the stock that the high growth stock, right? Some of the tech stock that you want to buy, but now it's high. Now it's not in favor. But you want to prepare, those are the great companies. So when it's being penalized by the macro, right? When it comes to the great valuation and the support holds and recover, right? Like some of the software stock was penalized more than 30% earlier, because of people are worried too much about the AI. But not all software stock is going to be severely impacted. Some of them has strong business domain knowledge inside that's not easily replaced. All right, then you're very prepared when it's like bottoming. Then you prepared to get back in. I don't mean you all go to the very conservative stock, right? So when it recover, also you cannot benefit. Okay, so that's what I can answer from the what I mean. But you have to really recognize the software disruption. Earlier, 2 weeks ago, and also during our early January symposium, I have a sharing about software stock. So you have to be very, very careful with like even companies like Microsoft, companies that charge per seat, right? Per seat, that means license is if you have 1,000 employees in a company and all need to use, let's say, the Microsoft Office, then you'll buy 1,000. But with AI in the future, right, do you think they will have more hiring or less hiring? With AI, companies will hire more people or less people. Yeah. So if they hire less people, which company will not be able to sell so many licenses, right? Yeah. So that itself is the reason why software stock comes down. You have to look at which software stock are able to overcome that challenge. Okay, that's why Microsoft is coming down. So don't just, wow, Microsoft, I don't buy back because it's a Mac 7. Like Microsoft situation is very different today compared to before. I'm not saying that it's a bad stock, okay? But it definitely has an impact from the per seat license model. Yeah, so because some of you might mention the Mac 7. Okay, let me look at the next question. Can you give some comment on Panami stocks? I'm not familiar with these stocks. So Malaysia stock, is it? Yeah. Sunbear Healthcare, right? Healthcare should be more resilient. But you also need to know other factors affecting the healthcare, right? Because now all these missiles and what is that, TB are coming back, right? Yeah, so some of those vaccine stock may come back, but always evaluate. I cannot give specific comment because I'm not investment advisor, and I prefer to go and analyze the stocks, right? I can give you more from the big picture on the macro to the industry, what's happening. Yeah, but for the specific stock, I don't have time to go and analyze the detail of the stock, so I hope you understand that. Yeah. What is the most important technical analysis? Yeah.
Yep, that's from Rishta Devi. Most
Yeah.
important technical analysis, I believe, for swing trading.
I personally like to use price pattern, right? So because that is like looking at the trend line, support, resistance, and candlesticks. You can use some. We do use some EMA to see the big trend, but primarily I like to look at relative high, low. Yeah, relative strengths. Okay. Yeah, that's the main one. I do have a sharing last year. If you want to go back and check that out, which is price action versus indicators, which is better. Yeah, so I shared a lot about that during that time, why I like price action. Indicators are usually slow, lagging. Although I do use some indicators like EMA just to be able to see the big trend easier. Yeah, but for precise trading, I use price pattern. They are still the fastest. Price pattern means support, resistance, trend line, relative high, low, candlesticks. Yeah. Okay. Maybe you can let me know which other questions I should take. Yeah, so that I can still leave back some time for you.
I think for those who are asking questions relation to investment advice, right? Kathlyn is unable to provide any advice for that. So let's move on to the next question. Would the prolonged war lead to stagflation with persistent high oil price?
It is whether it will persistent. I would say, yeah, the longer because the whole Middle East region, right, is producing the Strait of Hormuz, yeah, which Iran is blocking right now, right? No shipping company want there to pass there, and insurance company doesn't want to take the insurance already. So that strait itself carries 20% of the global oil demand, right? So if that is blocked itself, the oil price will consistently stay high. So as long as it's blocked, I also cannot predict how long that is going to be. But if you look at the Russian-Ukraine war, you will see that it's not easy to settle. But Donald Trump said that the bigger threat is yet to come, right? So that means he can have an even bigger threat. But there's definitely going to be a lot of after effect. So if they go brutal force, until that we don't know whether they are able to succeed that fast, take over the Iranian, then open back up the Strait of Hormuz, then the oil tanker can pass through, then oil will settle down back. So otherwise, it may, according to JP Morgan, oil price may go back up to 100. But I don't think oil is a good investment. It's good for trend trade like this, right? You capitalize on the temporary shortage, right? The price spike, right? So XLE is one of it, energy stocks. Just look at the trend and trade it. Yeah. So, but what is the prolonged impact? There will always be some company that can still make money despite the global crisis. You just go for the one that, it's just that because of this, globally, you won't see a very bullish scenario for the stocks already. It will be, I don't think the economy will be in stagflation. Okay, US GDP growth is still very good. Like Malaysia is still growing. The impact will be the interest rate sensitive and commodity sensitive companies. Right, you look at all AI companies, they are still making money. Right, just that the stock price is penalized for the meantime. Yeah, stagflation potentially for the Middle East area, right? They will be most impacted, right, with the war region. Yeah, so you have to look at what are you investing, which region you are investing. Yeah, so let's say in the US stock market, I can still find great companies I can invest in. Just that now is not a good time to go all out. I'm very, very selective. The stock that is aligned with the mega trend, I'm waiting for it to be penalized. Right, I have some commodity stocks that can in favor when you have all these shortages. Yeah, not just this, but the silver and gold, right, and also copper. But don't go into it just because I mentioned it. You need to know how to evaluate those commodity stocks. Yeah. So I don't think it's the whole world stagflation, but it's definitely not going to be a bullish scenario. When inflation goes up, it's usually bad for stock market. Yeah, but it doesn't mean it crash, right? It could be sideways to slightly down, but there will still be stock can trend up, right? Even in 2022, when the US raised interest rate aggressively, oil stocks still go up. Okay, but that's the only industry that goes up at that time. But then you need to wait for if you want to find great companies, right? It has to be crisis, then you have great opportunities. So you don't want to not look at those great companies, but you need to have majority defensive right now. Defensive could be those more conservative stock that will not go down so much or benefit from the crisis. Yeah, definitely not a time to be aggressive. Okay, like I know how to trade intraday, so during this time I focus more on intraday. Yeah, and I hedge my account for those the rest of the position. I have the QQQ bear put. Yeah, so I'm not worried even if the market crash. Yeah. Okay, so that's where the versatility come in, right? So you can learn other instruments to protect your account and have a peace of mind. Okay, and make sure that you have an entry at zero, have a stop loss, most important. Right, so do you agree that it's very important to learn it properly? Right, so we have a systematic approach to all the investment trading styles so that you can have a peace of mind. Yeah. Okay, so even gold, you have to don't chase the gold and when it's like way above the support, right? Yeah, gold also need to wait for the good support to go in. All right, so I think that's about it. I need to pass back to Shane. I hope so did you all benefit from it? If you benefit from today's sharing, like do provide the feedback when Shane actually posts the feedback form, right? That helps us to see what are the how this sharing benefit you, and also what are the topics that you would like us to share for the future. Okay, I hope you benefit. If you benefit from it, like do share with us on the chat and the feedback form. Thank you.
All right, thanks, Miss Kathlyn, for sharing with us about what we can learn from the past crisis like COVID-19. So hope all of you here have gained lessons today and gained insights from what she said a moment earlier. And maybe we can correct our psychological disempowering belief so that we can become an empowered investor. Okay, let me take over the screen control.